beach. What is up, everyone? So found this cool little feature just before I jump into the data collection. If you go into your personalized taskbar by clicking taskbar settings, what you can do is you can come down here and you can show seconds in your trade clock down there. Just when you are trading, sometimes you want to be waiting for the close of the candle and so forth. It's just pretty awesome because it just, instead of looking at it on TradingView, which I usually do, you can actually have it on your computer. I didn't know you could display seconds there. So that's just a cool little small tweak there, but just wanted to put it there. It's pretty awesome, pretty cool. So yeah, last week we were looking at GBP CAD and we were looking at price between this blue zone. So we saw price had structures in there, it was corrective on the way sideways, and then we had the decline. So what we're doing this time is we're just studying for all the patterns we can find that fit within our trading plan. So if this is a little bit too far forward for you or a little bit confusing, there's more content that I've posted previously where I do break down things like this. I do recommend watching something like a Saturday or Friday or even a Sunday market breakdown episode that I have released, because I do kind of break things down the charts and take a lot more time with it. So let's jump straight into it. So GBP CAD, and we're going to go back to our period which we're studying, which was, yep, it was this period here. So I'm just going to bar replay back over there and we can see that a little bit closer. So what did we have? Well, in red we've highlighted the areas we're going to go look at when we drill into it, just to see if there's any refined entries there, and we'll go back through it. So going to the 4 hour, what I do want to see is yep, okay, so we were over here. Now I did get a few messages that there were some entries that were potentially missed. Now don't get me wrong, there was, but I'll be honest with you, not a lot of them really jumped out to me as the ones, right? Perhaps on a lower time frame it could make more sense, but it's just because of the dominant direction from here to here. To be honest, we wouldn't have known it as well. This could have really developed into that and then sold, and then we're playing off the continuation of all of that, and then we're basically playing the short there. This was obviously, there was potentials within there. There was an abundance of trades. So what I do think is amazing is that you're recognizing them. That's a massive one up for yourselves as well, especially for those guys who aren't used to trading this style. And yeah, it's pretty awesome to see that and get that feedback as well. So I really did like that. So kind of break these down. I'm going to go into the 1 hour. So we did analyze on the 1 hour before, and we were essentially looking at the entry criteria. So we're going to progress with that, and we're going to get through these, and then we're going to refine it to see if we could have got any better entries that met our trading plan. So we were over here and we were looking at this little bit of price there. Now, to be honest, there was possibly a entry in there. It could have formulated into a loss, really. I think this is an interesting one because what you'd really look for is the next candle to break, or possibly you could have been tagged in over here. It's not a big issue. And then even if you went extra with 30, not the most necessary, you would have been taken out. So we can call it for a loss because this did look pretty good. So yeah, we'll call that in for a quick loss. I'll just leave it open like that just so we can actually see a little bit more clearer and we don't miss it. So that would be our loss, really and truly. We had to push down. What happened was we came back above all of this, we pushed up, correct continuation, and we would have been looking for that to go. What happened is psychologically in the markets, this was very deliberate. It shaped up during Asian session as well. So actually, to be honest, that wouldn't really be a trade for me. Only reason being is it's not my session, and to be honest, I wouldn't class that as a continuation because of the hours where it formulated. So that is a very interesting little piece of information there to take on board. Is usually when you have a flag which is formulating during spreads, low liquidity hours, bank holidays, Christmas Day, you know, holidays, seasons, and you get flags formulating, they're usually not as high probability as when they're in full session. So if this was coming into like London session and, you know, we started formulating something very clean, I would consider it, but given because this formulated from around about 7 p.m. to around about 6 p.m., I would be very, very cautious with something like that, just because of experience and what I've been taught myself. Moving on to the next, I couldn't really see any next continuations here. There's nothing very deliberate, nothing that kind of met my plan. Would have still been trading across there, and then eventually we would have had this. It's a bit more tricky as well, because you'd be pretty much on the verge of this. You'd be looking at a squeeze, and you could convince yourself that this could break and go to the downside. So it's a tricky one, to be honest. It is actually very tricky to say that that trade is a good trade, this one over here. Well, given how it was, I don't really see there being a problem with it. I think it's definitely one which is worth journaling. It's worth putting into the books. Reason being is on a different unit of time, that trade would have been pretty decent. So I'm gonna just scroll back. So I'm just gonna look at that. How would you take it? Well, yeah, I'd go tight on it anyway. I'd probably go 22, 23. That would have run around about 4%, so you'd be out 3 for sure. You'd be out 3%. You'd be aggressive in those areas, and yeah, it'd be a quick in and out situation as well. You know, you'd get aggressive just because you're trading from here, and then to the left you've got a correction over there as well that could be meeting that and selling off. It's just not the best territory to be selling in. I think continuations above that would have been decent. Anything above here would have been good. Something that kind of just pops out to me right now, it does feel a little bit forced, but I do see something like that where it's a little bit larger and then it moves. Whereas the entry, I can't really find one, so, and I would have looked for a 3-touch, so yeah, I would have left that one. There is an entry here for a short. Once again, what are we playing? How are we taking this? If we're looking at it as this is the corrective channel, right? I'm gonna take that one out because it's not my. I wouldn't want to take a trade within that, to be honest. Even though there was profit there, it's not something that I would feel very comfortable with at this point. It depends if you're up and down. Do you know what? I'll leave it in for data collection purposes, but personally, it's not something that I would want. Then we got this correctively moving. The interesting thing about this is, yeah, we are not really anywhere in particular. There's nowhere significant. Are we retesting the back end of that? That's the question. If we're retesting the back end of this, well, then we'd be looking at price get coming up all the way up to here. So yeah, I think looking into that too much may be a bit forced. I really need to stop clicking back and forth. Okay, so here we are, and yeah, there was that. So we basically correctively squeezed up. As you can see, all of this correctively came up, pushed away, accumulated some price in there and sold. There was a trade there, but I don't think we would have really wanted to take that. If you're a trend line trader, that, you know, this is something that you can go off and study, because you could probably build more capital from just trading something like that, where you could just see that structure and then basically take the entry within there. I'm pretty sure that could have been refined on the 15 or 5, and then you would have been playing that from pretty much from there to here, and then been more aggressive and probably been taken out somewhere there. So even so, if I just kind of size that up for you, what would you be looking at? You could go 10, and then from here it would have tapped into that low, so you'd be running roughly around about 6% at that low. You'd be putting in about 5. Yeah, you'd be out for 5% there, but that would have been just literally playing it off these trend lines. And I've seen quite a few people who trade like that, and don't get me wrong, I used to trade like that. It's just I didn't know how to piece the puzzle together, and behold, you know, it's a no-brainer, like how you can pretty much incorporate the way that I'm trading with pretty much almost any strategy, which is the amazing thing about it. It's very robust. So there's a 5% trade in there, to be honest. Would it be the trade? Not really, not for me. Once again, we correctively squeezed again. It's one of them ones where we pushed away, and then we re-tapped into this, and then we rejected. From a high time frame perspective, this looks pretty good, because that would be essentially your line in the sand for if price continues, then this trade is completely written off and we're not looking for that. This was a 4-hour entry. Obviously these are all looking pretty interesting from a 4-hour perspective. I would have taken it on that pin bar there, but it's bullish. The bullish wick got filled, and then we rejected over here. And I think, you know, you could have re-entered where the pin bar would have been anyway, but you would have gotten a little bit safer. You would have slapped your protection on, probably a little bit extra 35, and then yeah, you would have rode that. And then this continuation came in, pushed away. You would have been taking a break even on that one, and then this one would have ultimately taken you for 4.5. Then you correctively made the next continuation, took the entry over here. You could have even gotten a little bit late. It's completely fine too. Still within it, and then you could have done it. So that one I'm going to refine on the 15. Oh, I didn't have the 15, I remember now, couldn't see the 15, but even so, there was a potential trade in there as well. I just think it's one that we're going to have to just not log because of the lack of the lower time frame accessibility. Over here, likewise, I'm going to have to write that one off. Next part of information that we're seeing here, just going to zoom out a little bit so we can see a little bit more clear. We had the next continuation formulating just below this structure, which is nice. The one nice thing about it is it's basically coming off the retest of that low there, and then it's just happened to create 1, 2, 3. That's really nice, because this is just an added confluence, this ray line, but the 1, 2, 3 internally with the it looks a bit messy, but the context is there. You have the middle section, you have a 1, 2, 3 internal structure, impulse correction. The last leg was very corrective as well. And then what we tend to see over here is on the 1 hour, we then can see that we didn't completely tap into it. That's completely fine, but we mitigated that with the stop loss, just in case price just wicked up, came back down and sold, right? So you just want to always be a little bit extra cautious when you don't get the full commitment of that. But on different data, it might have just completely filled it, and then yeah, you would have been in that trade. However, you would have seen it there, and then you would have been out for 2.7, which is completely fine. Just keeping it just above the low of that structure, anticipating this to drop off, but it didn't. Next piece of information is it retraced, came in, so price got messy. At this point here, you would really not be too fixated on this. You know that it's got a bit more complex. There isn't any clear trades. I mean, look, if you want to force something, by all means, but you take that, you're taking it straight into that, right? You're taking it straight into this area here. So from here to here, it's not really worth it, because what can tend to happen is this will go, develop, do that, and then drop off on you, and then you're in here just trying to hold a trade, and you've been taken out. So just be mindful, like look left, you can see that there's a value area just sitting here. Is it in your best interest to be trading into that? Not really. Let that be cleared. If something cleared and deliberate comes in here, cool, but for now, like, that's not the highest of quality trades. That's actually quite high risk. Yes, there's profit to be made in there. You could have taken that and maybe made a 6% trade in there or whatever, but it's not always the case, man. You always want to go with good quality over just what's available, right? Don't just take what's available. Take what you know and what can actually build your consistency. Over here is an interesting one, right? So we can see that the high has been tapped in, but how did we tap into that high? Well, in fact, we actually came in with structure like that. If you kind of just size it up a little bit, it did kind of come in with kind of a 1, 2, 3 sort of angle, very subjective first touch. Not interested in that, but what I am interested in is this little piece of information here. Now, how did we end? Well, we actually ended with a bull flag, right? Which then happened to catch people out. So we went 1, 2, and then 3, and we pushed up, right? And I think coincidentally, if we use the flag to poll, it probably was no, I don't think it was. No, it's not. So anyway, regardless, it still played to be pretty interesting. A 1, 2, 3 into that. Would there be an entry in there? I couldn't tell you at this point, only because I can't go to the lower time frame, but a reduced risk entry on that would still be okay, but it's not the one, and you'd want to go risk entry. But this is not the area. This is a sort of trade that definitely, if you're up on your account, you could take that, and boom, that around 6%, you'd be out aggressive for 5, and yeah, that would be a quick and easy trade for you, and that would be your little trade right there. I'll log that anyway for some data collection purposes. Next trade over here, this one's pretty good. You can see it clearly on the 1. We didn't fully tap into that, not necessarily the case that we needed to. The entry would have been more so on the 15. I'm almost certain that the trade would have been somewhere in there, and then we would have probably been in for about 20, 25 if you want. And then yeah, this one you could have, how much was you running there? You'd be running around about 6. You could go aggressive 5 if you really wanted to. Let's just quickly zoom out a little bit and see what we're playing with. Yeah, nah, you don't want to be aggressive in these areas. Look at that. 1, 2, hit the override. If we go, what we're looking at, around about 24% trade, which actually did play out in the end from just understanding this alone, right? So that would have been a phenomenal, absolutely phenomenal trade. I mean, okay, the truth is, when you're running around about 20% at this point here, do you care about that extra 4%? Not really, right? 20%, I would have just manually closed at that point, to be honest. Like, I don't have an issue with that. I probably would have been aggressive somewhere around about here. Maybe even when we tapped into these lows, 12%, I would have been around about 10%, yeah, so I'd still be in that trade. And then we dropped off aggressively. We didn't really make any major pullbacks. 20% came back to 16, so yeah, around about 18%, I think, with my management style, I would have just walked away with that. And despite the fact that this continued its run, which is completely fine, right? These things happen. There's more trades here, and this did run for like 59-58% over the course of February, March, April, and then May, so June. Oh, and it probably goes on, right? Yeah, I mean, what would I have actually run if I held that for 6 months? I would have, yeah, 126%, mate. Phenomenal. Yeah, that's a very, very interesting observation there, and I think the psychology of this is super important. I do apologize about the mess. I know sometimes it's useful to hide them, but I don't like doing that, to be honest. I like to see it for what it is. You can see that we had the 1, 2, 3 failed. Didn't fail actually, just it was unnecessary for it to complete. We overrided with that corrective price action, which was the clue. We did actually come in with a free touch as well, and then we pushed away insurance entry. That was the higher risk one, that was lower, and then it just gets even better. So yeah, phenomenal. I'd be out for 18% on that one, so I will just put that there. Oh, I can't go to the 15, force a habit. And let me have a little look here. So I go to the 1 hour now, and let's get a little look at the next entry. So over here, tricky one, to be honest, because there's a reason why I wouldn't take this. We're basically on this low here, in that area there, so I wouldn't want to take that, to be honest. Yeah, there's room for this to go lower, and I guess actually, to be honest, if you're running 6, you're holding in 1-2% locked in at this point, maybe even 3. No, you're locked into about 2%. It's debatable actually, even calling that an 18% trade. No, yeah, you'd hold that for sure. Don't know why I'm second guessing myself on that. Let me have a little look. Wicked. And yep, now what we're looking at is the next one. I think likewise Could have reduced risk entry it, to be honest, but I wouldn't take that. There was a trade there, to be honest, and it is bothering me a little bit. And I would consider it, to be honest. Maybe even 40 pips on that. Yeah, around about 7%. I'd be out on that for sure. Around about 6, only because that's my scaling trade. I would go above that, but whatever. That's that. That would be out right there. There's a trade right here which is beautiful. Honestly, this trade is stunning. Right there. Right here. Now, you could argue that that trade that I was just looking at, that I marked over here, is nice, but I'll be honest with you, it's not the one. I'll let that go. This one over here, though, this is an interesting one. This one right here is really nice. You could even argue pending order, or yeah, pending order right there. Getting taken right here. Call it 40 pips. And yeah, you'd be in. You'd run around about just under 5. You'd walk away with 4 on that. Oh man, these are stunning. Do you see what I mean? How amazing trading can be when you just understand things. But the craziest part is you'd have to wait, right? You'd just be out of this trade on the 3rd and you'd get into another one pretty much on the 4th. So that one is a bit mad. You'd be holding another one. Psychologically, there's a lot of stuff going on in your head. Yeah, so you'd be out 4% on that. I think as you'd be out on that one, you might even get aggressive on this one, 19. But so be it. Yeah, I'd move my stop right there, and I'll just go 19.5. Add it on top. Yeah, you'd be roughly around about 23%. 23. Yeah, that's pretty incredible. You wouldn't know that's the low, and I don't know why you would want to get aggressive at that point, to be honest. So yeah, we'll leave that as that. Nothing in here, I'll be honest with you. We couldn't make do. We'd be out of the market at that point. We'd be looking at this being like, okay, well, it could pull back, but at least we're out, so we don't need to worry about anything. There is this as we came to the low. Again, in abundance. You know, I'm flowing so well with this pair right now that I'm just seeing everything I need to see. There's that. Internally, we've got this. Not the best, but it's there. Boom. Trade right here. We just saw on the high time frame that we're not trading into anything significant. I take it right there. 40 pips seems like it's the one. You'd be running roughly around about 3.5. I'd call it 1.5. I'd go out right there, and I would have been taken out of the market just there. Walk away with 1.5 there. Price came back up. Nothing significant at this point again. Yeah, there's absolutely nothing there. You could argue that this, but this was a part of this. And this had no business coming back up, but again, I just don't see that being a trade that I would look for, just because of how yeah, I would leave that. We can see this for what it is. It's basically that. It's just that structure's not the one. That descending is not the one, so I'm going to just remove that. See this a bit closer. There is a continuation for shorts here. Have a look a bit closer. Yeah, you could argue the point, but you'd see it two ways, and it's one of those ones that I think I would just have missed it. I would have had that one there. I would have then seen it like this, and when we broke here, you could have taken it reduced risk. Yeah, you would have gone reduced risk. You'd have no choice at that point there. You'd probably go 45. in case that pulled back. Nah, I'd go 50. I'd go 50 pips on that. Seems pretty large, and then to that low, at least I can protect myself. Break even, I've got bang on 1% there, so I'd go break even, and then at break even, I would have probably just survived. I would have just survived that, and then we committed. At that point there, we did get the commitment. I would have moved to 1.3. Would have seen that drop. I think at that point there, when we ran around about 4%, I would have been pretty excited. I would have gone 2% would have been for me just about here. So I would have been covering that piece of information there. So I've probably gone 1.7, and then we dropped off for 5. I would have gone 4 aggressive, yeah, and I would have been out for 4%. So yeah, that would have been the trade for me. Okay, so the psychology behind this trade, right, is we are descending, so that's your first red flag, right? The next one is, if this is the full trade, then from here to here, can we manage it? Yes. Okay. How would we manage it? Would we put it on break even and just leave it? Okay, cool. Depending on where you got into it. If you got into it just a little bit late, then you would have been taken out probably. So it's one of those ones where you would have waited for the close, you would have just got the close, you would have either got in a few pips higher or lower. You would have then just taken the risk and played it, and then played it into that low. Once we tapped into it, 100% at this point you would have moved to break even, because this can just retrace and come back up and then do whatever it has to do. So at that point there, we just fortunately stayed in by a few pips, and then we dropped off, and then we walked away with 4% in the end. Coming into the next piece of information, we've got this, which looks a little bit more clean now. I look at it from here, and you've got that piece of information, and that would have been your continuation, playing off the back end of the retest of this. Beautiful. This is great price action, guys. Look at that. So what do we have over here? We've got 1, 2, 3, and then internally you can see that's just squeezed. Entry wise, let's have a little look. I think there's a bullish pin bar there. Yeah, we can see that price didn't quite completely just perfectly tap into it, but then at the same time, yeah. And then what do we have in here? We can see that that's forced. Very, very interesting price action there. I think what I'm going to be doing is probably taking it on that one there, or even this would have been better. You would have then probably, I would have gone 50 again, I'm not going to lie, just because I would have gone 50. We would have pushed away for about 1.5%. You would have taken a break even on that. Yeah, would have walked away for break even, and then yeah, I would have left it. I would have left that. I wouldn't have taken any more trades, and it would have just gone without me. It is what it is. I just know myself really well that if I did take it again, I would have taken the same entry somewhere, had my protection above, and then I would have been in the trade. So it's one of those ones. This one is very debatable, but in terms of entry criteria and what you do, you'd either take it from that one or you'd yeah, it is what it is. I'll leave that. I think there was a 4-hour entry in there, so I'll come back and just quickly check that after. So I'll circle it for the 4-hour, and then pushing down. Can't see any entry as such just yet. We've now completed on that. We retraced, pushed back. Arguably, but no, there was no trade there. It's too small for what it is. What are we trading into? Let's go to the 4 and check that out. Okay, so we're not trading into anything just yet. If I just mark this on for understanding where we are. Okay, so it's not until we're all the way down here and we're completely fine, so that's irrelevant at that point. A 4-hour entry on that. Let's have a little look. There was no clear entry where we thought, so we'll remove this. So far, we're not finished. Okay. Okay. Yeah. Yeah, let's break even. Maybe even a small loss, but depends how ballsy you are. It depends what you were doing around about this time. You would have taken a trade roughly around about London session. You would have come back and looked at it around about New York session and been taken out, and then you would have just accepted it because you would have seen that on the 4 hour and been like, hell no, I'm not staying in that. You know, that's just reckless. Could turn into so much. So yeah, walk away, nothing on that. Over here, there's nothing. And then that did get tapped into. So let's go back to the 1. Alright, so we know that the ray line was coming into this area, so this is the large continuation with a continuation. Yeah, there's literally no trade there for me. There's no trade there, that's a squeeze. I can't refine on that, so I can't tell you if there was a trade there. That pushed away, nothing. Over here there's a trade though. I could take a trade in here for sure. We've broken the lows. We've now traded through it, and we're basically creating a continuation as such. I am cropping through the wick. Now, I don't have time to talk about wick cropping in this video at all, but it's something that I think, you know, you speak to Ibby about it, he'll definitely either break it down in one of his videos, or I learned how to wick crop really well from him and Danielle, so those are the go-to people. But wick cropping is something that I think it comes with experience and just understanding where its relevancy is. Here it doesn't really matter if you wick cropped it or not. It didn't really play a major relevance, but hey, yeah, no real trade there for me, I'll be honest with you. We just missed it and then sold off. Anything would feel like FOMO at that point there, so no trade, continued, and then we repulsed. Just going to zoom out quickly. I can see something right there, but it's within this. And positioning, yeah, I'm not too sure if I even want to be involved in that. I mean, just putting that on quickly. I just clicked on the 15. So eager to see the 15-minute chart, I keep forgetting. Interesting, this one. So what happened? We 1, 2, 3 pushed up, pushed back in correctively, created this pattern. There is a trade here. There is an entry right there as well. It's risky, very risky. You would walk away with a decent amount. Wow, yeah, man, this GBP CAD's got the goods. Honestly, GBP CAD, underrated, absolutely underrated. Love it, absolutely love this pair. Can't believe it. Just study it, honestly, guys. I mean, I hope you're finding this entertaining, because I am. And if you want to feel the entertainment, then definitely do the studying as well. Okay, we'll mark the trades on, and we'll just put them on for management. So there's the trade in right there. Did have the internal as well, which is cool. You're probably going 50. I'd go tight on that. I don't really care, because if it takes me out, I'm not going to hold a 100 pip stop loss. To the low, about 2, 3. Yeah, I'd just hold a break even at that point. Over here, I've got the next trade, and I'll manage these together once they're both running. I'd go 40 on that. Once again, we know the ones. I could go 50. No, I'll go 40. It's fine. 40 is more than fine. And even on the next candle would have been better, to be fair. 40. And yeah. Let's see. So this one ran for around about 5. Yeah, I would go aggressive on 4. Let me just zoom out quickly and have a little look at what we're trading at. Yeah, 4% for me. I'll walk away with the 4% there. I think that's just literally taps in 2 touch, sells off, insurance entry goes, okay. And then yeah, that one likewise, I would have just been out here, 4.7, 4 point thingy. Yep, done. Okay, fine. And then if I was smart, I would actually just go 3%. Why? Because you'd see this as, okay, that's the accumulation, that's coming in, that's going to tap in there, and then it's going to go. And then if it comes back, it'll tap into that, and then you'd be in for the next run, and you'd be well protected above. It's one of those ones, because by the time I would have been here, I haven't really hit anything significant. So yeah, I could really argue the point that that's 8%. Yeah, I'd be reckless. 7.5, and that would be there as well. And there is a scaling opportunity here, but once again I can't refine it, so I can't add it in. But yeah, that's pretty good. So 7%, 2 7% trades, one with 50 pips and one with 40 pips, and yeah, pretty good. So that would have been that, and then we would have committed. I can see this again, a really interesting bit of price. That we have this over here, and then we have internally we have that, and then this is the overall size of the structure. So I'd be trading from that to that, and then I'd be aggressive into that low. So what, I'd be going around about 50. I'm just rounding these up. 50 is actually a lot. 50, and then into that low we're looking at about 3 to 1. Yeah, so aggressive at that point for 3%, and then be taken out just there. And then we look at the next point of price, where, to be honest, we didn't actually get anything clean. We got this again. Wow. Now that's cool. $50 pips, and then you'd be trading it into that point there, which would be 2.4. Is it really worth it? 2% pulls back. You've got 1% locked in. It did go down to around about 3.75 at that point there where the wick is, and then yeah, you'd be out 3% for sure. Probably if it's running around about 3.6, yeah, 3.2, 3%, doesn't really matter. You'd be out around about this point. I'll just round it to 3, make it easy for myself. 3%, and you'd be out in the market there. Reason being is, you know, you got the wick over here, so once we've actually just tapped that in, I'd just be a little bit more cautious. Now I'm going to zoom out right just a little bit more, and okay, so we pushed up. We're in this range, so as a range play you could take that from A to B, anticipating that. I don't know what the risk reward on that would be, but that's more for a refined trade. I can see already there's no entry for me on that. Yeah, this maybe there was an entry actually. Fuck, let's have a little look at that. So if we take this and we go like that, I don't like that. Well, yeah, I don't like that at all. Interesting. It's coming into here, we'd be looking for shorts again, because we'd be playing a similar type of structure. Yeah, the second candle. This is something that I've kind of just reignited. Is the second candle ones is the one. I think there could have been a trade, arguably. No. Up here. No, I don't know. It seems so risky. I can feel the risk. I'm going to leave that. Pushed up. Okay, so what have we tapped into? We've tapped into that area over there. And then this was the causation of the sell. Cool, interesting sequence coming up. I'll evaluate this, all of this. We pushed away. Oh, this is interesting. So we started accumulating continuation in here. I can't give an entry because I don't have the 15. Over here again, Interesting. Probably was a trade right there. $52. I'd weight crop that. I'd probably just go 40. Yeah, you ran around about 3.9. Probably get out around about 3%, 3.1. Yeah, if that. Maybe it pulled back pretty aggressive. So let's just say 2%. No, sorry, 2. Fuck it, 3% is what I'd be at because I'd have that low there. So, yeah, nothing just yet. Scanning that, nothing really pops out. You know, these continuations down here just didn't get an entry as well, which is nice that you don't get an entry because it keeps you out of them low quality trades. This one is quite interesting. So look at this, right? We've got the low here, we've got that low there, and then we've broken this low here, okay? And then in between it we formulated this. So I'm gonna try get positioned in here so I can manage into that part with the anticipation that it comes this low or breaks and goes lower with the momentum that's following, right? So I'll just remove that line and we'll keep that low on. So let's just do that. And what we can see, now we'll isolate this, okay? I can't look at it on the 15, which would have been super useful, but there's a 1 hour entry on there, which is completely fine too. We've got this flag formulating here. And then what's nice is we get the entry right there. We put the size on there. Into that low, we're trading around about 3-ish%. You'd want to be loose on that. I'd probably say 1%. Hold a 1% on that. And then we'd let to see. And then what happened over here? Oh my days, more entries. Where was I when this was happening? Okay, cool. We got that. There's another entry scaling, and I'm holding 1% profit on that. Wonderful. Okay, cool. Go 40. Could have walked over break even at that point. Yeah, I would have walked. Yeah, break even for sure. Over there. Here's what it is. And then this one would have probably taken me for 2.7. Oh well, at least I walked away with something decent on that. 2.7. Interesting thing is you could hold a 1% and take the 1%, and then yeah. Anyway, it pushed away. No entry in there as such. There was actually that little bit there. If I refined it, I probably could have found something in there for that insurance entry to go short, but it wasn't the one. It would have been another break even anyway. 1, 2, 3 in here. That's pretty much me all over it. So I'm going to remove that ray line because we've now completely smashed through it. There's this, but we are coming off the corrective wave, so it is higher risk. Once again, I've just banked 2.7% a few days ago on it, so 40 pips. Wow. So many entries. What am I running? I'm running about 2. Yeah, I'd hold about 1% there. Hold 1%. And then I would take this trade over here. And then we would have had the entry right there. This is where hell of patience comes involved, guys. You know, you'd have to be so patient, wait for these things, and then go when the light is green. Okay, 4%. So we ran for around about 5. Yeah, I would have walked away with, call it 3 on this one. That one as well, likewise. Probably same situation. If I'm getting out on both. So 3 and 4, another banger. You know, to be fair, I could just trade GBP CAD the whole year round, man. I'll be pretty good. Then we came back up, we tapped into this point, retested the back after that, we sold. There's a trade in there, but it's not I don't have entry criteria for that. Correctively squeezed, didn't feel nothing, came back up. We tapped into this. If I zoom out, yeah, it's nothing. But that trade there, I'm going to end the session on that one for sure. Just going to remove that. Don't care about what happened down there. This is the banger trade that ends the run. All right, let's see. So what do we have? We've got that continuation has then left that high. We've then got a 1, 2, 3 leading into it. I wish I could see that on a refined time frame to see we correctively squeezed back up. We created the lows, and yeah, entry would have been right there. Would have been large. Am I looking at 60 pips? Oh my god, it's 100 pips stop loss, guys. It's 100 pips stop loss. Would I let that put me off though? I wonder if there was a trade in there though on the lower time frames. There probably was. Anyway, this just dropped off the face of the earth. It even went to 10% with the 100 pip stop loss. Regardless, we would have probably walked away with about 8%. Yeah, 8%. Sounds about right. And yeah, that's it. So guys, that summarizes this session. I am probably not gonna spend the next video documenting this. I will probably just go in, and the next time I do data collection, I'll just go on to the next pair. Once I've kind of documented it and stuff, perhaps maybe I might display it in a separate video at some point, but I don't see it as hugely necessary. So just recapping, we can go over these trades quickly just before we end it. So we can see that we had the first two, which was 416 and 303. So we can add these up. I'm looking for a calculator on here. Okay, let me just add them up separately on the side. So I've got, I'll just add them up. I won't add up the extras. I'll just add 4 and 3. 7, 9, 13, 14, okay, 14, 15, 16 because of the halves, whatever. Tallying them up, 15, what was that? Oh, there is profits in there. I thought they were all break-evens. What was that? I think that's that loss. No, 15, 15. Yeah, that's 16 now. Then we're looking 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28. No, no, that's break even. 20, oh my god, 27, 23, 22, sorry. 24, 25, 26, 20, 31. Oh my god. Yeah, 40, 50, 59. 65. Wow. 69. 70. Is that 70 or 70? 80. I think it's 70. 74. Break even. I think we had a loss in there, so I'm just going to say 74 because we did have all those extra little pips that probably added up to like 3%, but it is what it is. So there's that 74, so 81, 89, 92, wow, 95, 96, 97, 98, 99, 100, and oh my god, 104, 107, 107, and then wow, guys, we are over 100% anyway. Yeah, that was a phenomenal session. You know, I think all in all, there was a lot of value there. It's 115% in total. Probably call it about 119 plus those little extra pips that were outside of it. So if we call it 120% period over all of this, we studied from September 21 all the way down to October 22. So over the course of just trading GBP CAD alone and trading it very well, you would have made over 120% on this pair. So guys, that summarizes the end of the data collection episode. I hope you found a lot of value in this episode, and keep progressing through the mechanics, keep progressing through the content that's been released. There's so much value in it. As you can see, there was an abundance of opportunity and the importance of what to wait for, the time and patience that's involved with trading, and just ultimately how it can be a very nice reward. Sometimes you can fall into emotions like myself, where I have previously fallen into market traps or even emotional traps where I've just got too intraday. There is a lot of an abundance of opportunity around, but it's not necessarily always the case. Now this was just one pair. Throughout these 30 days we're going to go through a whole bunch of different pairs, but as you can see, there's an abundance of opportunity throughout. So guys, stay sharp, stay vigilant, and I'll catch you guys in the next one.